In this video, I'm going to break down the simple process to finding a house just like this one, to buy it easy and cheap. This is a $219,900 home, just under 2,300 square feet, 3-bedroom, 2-bath, fenced yard, garage. I'm going to show you how to find houses like this, how to negotiate the best offer, how to get the money and get approved to buy houses like this, not with just minimum down payment, but 100% financing. Whether it's your first home or an investor, you'll want to sit tight. I'm going to also show you the many mistakes that people make when buying any piece of real estate. Now, to get the money to buy a house like this, there's a couple of ways. One, if you're an investor, you're looking at hard money lenders. Hard money lenders can be found in any city, county, state, all around the country. You can just Google hard money lenders near me. Now, hard money lender, basically, they're going to loan you the money, but you have to understand they're not only going to loan you the money, but they want you to have some skin in the game, typically around 20% of the purchase price. Now, the less money you have, the higher interest rate they're going to charge you, but oftentimes it's not the cost of the money, it's the availability of the money. And I'm talking about flipping a property. I'm not talking about keeping it long term unless you make such a profit on it after you purchase it that you can sell it or refinance it and cash that person out. The second way to get money is to simply get approved, whether it be USDA, FHA, conventional, those types of loan programs. USDA is a 100% loan program. There's lenders out there right now with FHA that could do 100%. How those are 100% loans is basically they're giving you the 3.5% that you need for an FHA loan for the down payment. You're getting that through a second mortgage. So I always just tell people, buyer beware. You have to know what you're signing. Good lenders will share that information with you. How do you find a good lender? You simply go to Google and you Google USDA lenders in my area or FHA lenders in my area. And you'll just want to ask them questions. How many FHA loans do y'all do a year? How many have you done? What about USDA? USDA is United States Department of Agriculture. It allows you to buy a house on the outskirts of major city limits, typically 30 to 35 miles outside those city limits. Now, once you get approved, and you got to have typically a 620 or higher credit score, a couple of years on your job, and they're going to ask for bank statements, they're going to pull your credit. But one of the things that you'll want to do before you even call a lender is pull your own credit. You see, if you don't pull your credit, you never know your credit. It's best to pull your credit before the lender does. That way you can contest and address anything that's on your credit that may not even be yours. Now, personally, I think it's a shame that you have to pay money to get your credit score. You can go to creditkarma.com or My Free Credit Report. You can just Google that stuff and it'll pop up and show you how to pull your credit report for free. But here's what you want to be aware of. You want to make sure that it's a tri-merge credit report. See, most people aren't aware that mortgage lenders do a tri-merge credit report. That's Equifax, Experian, and TransUnion. Those are the three major credit reporting agencies that lenders use. You don't want to just do one of those. You want to make sure you pull all three of those. And some of those free ones, they simply just don't pull all three. I personally use my FICO. You can use any one that you want to use, but you want to make sure your credit score is 620 or higher. Please forgive me for not introducing myself. Sometimes I get carried away. My name is Wayne Turner. For 30 years, I've bought, flipped, sold, done just about everything when it comes to real estate. I've helped thousands of people buy and sell their homes. And I only share that with you, not to brag, but to give you the confidence knowing that what you learn from me is from actual facts. I've lived this. This has been my life for the past 30 years. And I just love to share. It's something that's fun for me. And Lord forbid, there's so much information out there, but oftentimes it's not the truth. You know, everything you hear on the internet is the truth. So that's why I said, hey, go get me a camera a couple of years ago. We hit record, we started a channel, and now here we are. So if you haven't subscribed already, hit that subscribe button, give us a like, leave a comment. Most importantly, ask questions. I myself answer almost all the comments to all of our videos. Now, if your credit score is less than 620, you need to pull your credit, look at what you have on your credit, and pay off your minimum credit card. But let me tell you, do not cancel the credit. Do not cancel the credit card, because then you have less credibility. I know it sounds crazy, but don't cancel any credit cards if you're looking to buy a house. Just pay down those minimum payments and pay off the minimum balance of the credit card, and it will boost your score. And then go to the next one, and then the next one, and the next one. If you're out there and you've done this, type in yes in the comments and let us know. Give me a thumbs up if this has worked for you, because you commenting and you letting me know lets other people know, and together we grow. Now let's go around the corner here and take a look inside this house. And what's important to know is how to find these houses. This is a foreclosure. If you want to see foreclosures, you can try to go to Zillow and Realtor.com, but you have to be aware when you go to those sites, oftentimes those homes are not listed. You see, all banks nowadays, they literally list the property with the real estate broker. They put it on the market, it goes into the multiple listing and then Zillow. What happens is, Zillow, Realtor.com, a couple of those big websites, they'll grab these houses, but they're not yet listed for sale. Now, if you want to see a complete list, you can go to findmyforeclosure.com. That is a paid site, it's not free, but if you want to see every house that's literally a short sale, a bankruptcy sale, a tax sale, whatever it may be, go to findmyforeclosure.com. You will literally see foreclosures on that site. So simply write that down. There's some more good stuff coming in this video. Write that down, take a look at it after you finish watching this video, because that's why you can drive around and look at these houses in the process of getting approved, and you can be in something just like this. Let's take a look. Now, before I forget, that paid site is around 40 bucks a month, but you can cancel at any time. It does give you a list of foreclosures. This one's really nice. So $219,900. People say, Wayne, how do I know if it'll go? You got to look at the roof, if it'll go FHA or USDA or conventional. This house is a foreclosure. Most people, you can see, I'll stretch out a little bit. Most people, you can see that it doesn't need much, like maybe a room or two painted. Big living area, take a look at the kitchen. Kitchen with granite. You gotta love that big window. I love a big window in the kitchen, granite, stainless appliances. That dishwasher looks new. Sometimes the banks will come in and do that. Oftentimes they don't. It needs some hardware. Looks like somebody took the hardware, but that's no big deal. This is another little area. So you've seen the living room, dining room there. This is another little game room, playroom, French doors. There's the front door that I just came in. There's a bathroom here, granite countertops. Here's the main bedroom. Huge room. Love the double windows. Plus, get this. This is what I always tell people, if you can find a house this way. Double closets. There's a closet there. There's a closet right behind me. And look at this. Double vanities. Don't have a mirror? Man, that's nothing. You can pick up a couple of those at Target or Walmart or somewhere. There is a little bit more to this house. Like I said, it's like 2,300 square feet. That's total. That includes the garage. Heated and cooled about 1,710. Another big room here, another room here, and then this is the garage. What's also cool about this house is the floors are in great shape. There's no carpet. Like here's the 2-car garage. If somebody wanted to finish the sheetrock this way, they did it years ago. This house was probably built in the 80s. Somebody wanted to finish that off, they could. So look, you find these houses by go to findmyforeclosure.com, Zillow, Realtor.com, but you just have to know this. Foreclosures are not always crazy negotiable, and the reason why is because the banks have the properties appraised. They know what they're worth, they're pricing them. So oftentimes people think, man, I'm just gonna make a huge offer on this house and get it for a lot less. Here's what you have to look for, and this is a pearl, if you will. You wanna look for days on the market. Ask your real estate agent for days on the market, and also look for the days on the market. Oftentimes a lot of these websites will have the days on the market. The longer a home has been on the market for sale, the best offer you get as a buyer. Now, as a buyer, there are two things that can hurt you when it comes to negotiating the offer. One, getting too emotionally attached to the property. You see a house, you see the neighborhood, maybe you have a friend, coworker, family member lives in the area, it's in your school district. You just can't get too emotionally attached and overpay for the property. But you just have to know this, that if it fits within your budget, and all of these houses that I show you and I walk around, and what we're talking about, these are homes that once you buy them, even if you bought them with 100% financing, you're looking at a mortgage payment total with taxes, insurance, private mortgage, everything, less than $2,000 a month. Now, another mistake that people make, not only do they get emotionally connected with the property, is they start looking at the price. You have to understand that if you're putting just minimum down, sometimes looking at the price, you can kind of bite your nose to spite your face, as my grandmother used to say. It's like, you know, don't step over a dollar to pick up a dime. Because at the end of the day, you have to look at what it costs you per thousand, per 10,000. Like right now, it's costing about $64 for every $10,000 that you borrow. That's your principal and interest payment. It's also going to cost you a little bit more, like on $100,000, that's going to cost you $640 for every 100,000. The point I'm trying to make is, and I'm not telling you to get yourself in a trap or get yourself in a pinch, you have to look at what you're approved for, and if the difference in you buying a house that you absolutely love, like this one, in a neighborhood that's quiet, that's convenient, that's close, that you really like, if it's $5,000 to $7,000 or $10,000, you might want to reconsider what it's going to cost you on a monthly payment. Don't get so much caught up on those, you know, $5,000, $7,000, $8,000, $10,000, because oftentimes what it boils down to is maybe $20 on a monthly payment. Not buying 2 or 3 cups of Starbucks on a monthly basis can make a difference from whether or not you buy the house or not. Now, please know I'm certainly not trying to talk you into buying a house or anything. You just have to do you and be comfortable. This is just information that you can look at and kind of chew on. Now, when it comes to negotiating an offer, you're going to make an offer on a house. You can also ask the seller to pay your closing costs. Closing costs are going to run you about 3.5% of the loan amount, what you're actually borrowing. If it's a $100,000 loan, 100% loan, on a house that's like $220,000, then your negotiating closing costs are going to be about 3.5%, and the seller can pay those. Banks will oftentimes pay closing costs. New construction houses, they'll pay closing costs. That allows you to get into a house for very little money out of pocket. But once you negotiate that and you get the offer, there is a due diligence period that you have in which you can do a home inspection. I always tell people, it doesn't matter if it's new, pre-owned, used, foreclosure, doesn't matter, get an inspection, because that inspection will tell you if there's anything wrong with that house. But here's where people drop the ball on an inspection. They assume that just doing an inspection is going to give you a list of items that need to be fixed on the house. Once you get a list of the items that need to be fixed on the house, you can then negotiate that with the seller. So you're typically going to have an agent working for you on your behalf. That agent's fee, 99% of the time, a good agent will have the seller pay their fee. So it doesn't cost you anything as far as having an agent work for you. That's the way real estate agents are compensated. The seller typically is gladly to pay your real estate broker because they're excited because that broker bought you as a buyer for their house. Now, once you get that list of repairs, you can show that list of repairs to the seller's agent, and that seller's agent is going to show up with the seller. And to make a long story short, they're going to negotiate repairs. They're going to say, yes, I'll fix it. No, I won't. You kind of go back and forth. And bottom line is, you just have to be happy with the house. If the water heater, for example, is 10 years old and it's still working, and the home inspector says, you know, it's at or near its life expectancy, you should probably get it replaced. Don't get upset if the seller says, hey, it's working, I'm not replacing the water heater. One thing you can do is get a home warranty. These run about $600 or $700. Ask the seller to pay for your home warranty. That home warranty will cover the water heater if and should it should ever burst. Now let's jump back over to USDA and FHA. USDA and FHA are pretty much very similar. USDA is United States Department of Agriculture, and what they're going to do is they're going to loan you money on the house, not just based on the house, the area, but they're also looking at your income. So if you're a family of 4, you're a married couple with 2 children, you're basically looking at your maximum loan amount of around $115,000. Now, $115,000, depending on your debt to income ratio, would approve you for buying a house this way. Of course, it's all relative. Every loan is different. Every single person's credit is different, income different. All of that is different. FHA is very similar. And as I mentioned, you can get a 100% FHA loan, but they're basically doing it with a second mortgage. That may or may not be something you're comfortable with. At the end of the day, you have to be approved and qualified for that because they want to know that you can, in fact, pay the mortgage payment. So findmyforeclosure.com, that's where you can find a lot of these properties. Look at how many days of home has been on the market, who owns it, and what's the reason why they're selling. Always ask the agent, why are they selling the house? It's so important to know because it gives you a little heads up, if you will. Is it an estate sale? Is the house empty? Is it a foreclosure? Is it a divorce sale? How long it's been on the market has a huge factor in your negotiations. Listen, until next time, thank you. Give us a thumbs up, comment, ask us questions. Be sure and subscribe to the channel. Until next time, may God bless you.